UnitedHealth touches 1 in 3 Americans every year. From the moment someone visits a doctor, fills a prescription, or enrolls in Medicare Advantage, the company is quietly shaping their healthcare experience. The US healthcare system is a vast and complex network with trillions of dollars flowing through insurance, hospitals, pharmacies, and government programs every year. Generating more than $450 billion in annual revenue, UnitedHealth is not just an insurance provider. It is a healthcare empire, combining coverage, services, technology, and analytics in ways few competitors can match. But how did this company rise from a small regional insurer to a nationwide powerhouse? Today, we take a deep dive into the history, strategy, and future of UnitedHealth Group, uncovering the story of a company that has redefined American healthcare. UnitedHealth Group's story begins in 1930 with the birth of Richard Burke in Minnesota. From a young age, Burke showed an entrepreneurial drive, coupled with a keen understanding of finance and risk management. After completing his business education, he entered the insurance industry, learning the intricacies of underwriting, claims processing, and provider networks. In 1977, Burke founded United Healthcare Corporation in Minnesota. His vision was simple yet revolutionary: offer affordable, high-quality healthcare coverage while using data and analytics to manage costs and improve outcomes. Unlike traditional insurers of the era, who focused mainly on processing claims, Burke wanted to integrate care management, preventive programs, and early intervention strategies into the insurance model. The early years were challenging. UnitedHealth was a regional player, serving local businesses and their employees. But Burke's commitment to data-driven management set the company apart. By analyzing patterns in patient care, the company could identify high-risk individuals, implement preventive strategies, and reduce unnecessary hospitalizations. This approach, still rare at the time, laid the groundwork for what would eventually become one of UnitedHealth's most valuable assets: its ability to integrate insurance with healthcare delivery. By the 1980s, UnitedHealth began to expand beyond Minnesota. The company pursued a strategy of acquisitions, buying smaller regional insurers and healthcare service providers across the United States. These acquisitions allowed UnitedHealth to diversify its offerings, enter new geographic markets, and increase its scale. In 1984, the acquisition of MetroHealth marked one of the first major expansions into specialty healthcare services. UnitedHealth also began to integrate pharmacy benefits, disease management programs, and provider networks, allowing the company to control more of the healthcare value chain. By the 1990s, UnitedHealth had become a national player, leveraging its growing data capabilities to manage care more efficiently than many competitors. During this period, the company also embraced technological innovation. Early investments in software and analytics allowed UnitedHealth to streamline administrative processes, reduce operational costs, and improve member engagement. While other insurers relied on reactive models, UnitedHealth's proactive approach to care management set the stage for its rapid growth in the 2000s and beyond. While Richard Burke established the foundation, subsequent leaders took UnitedHealth to unprecedented heights. Stephen Hemsley, who served as CEO from 2006 to 2017, was instrumental in shaping the company's modern strategy. Hemsley focused on diversification, operational efficiency, and expanding UnitedHealth's presence in government programs like Medicare and Medicaid. Recognizing the aging US population as a long-term growth driver, he pushed aggressively into Medicare Advantage, which today represents a major portion of the company's revenue. Hemsley also spearheaded the expansion of the Optum division, which now accounts for nearly half of UnitedHealth's operating profit. Optum combines healthcare services, pharmacy benefit management, and technology solutions, creating a unique competitive advantage. By integrating insurance coverage with direct management of healthcare services, UnitedHealth could influence care delivery, reduce costs, and increase revenue at multiple points in the system. This integrated model also allowed UnitedHealth to innovate in ways competitors could not. For example, Optum leverages predictive analytics to identify patient needs before they escalate into costly medical events. Telehealth services, pharmacy management, and care coordination all operate under a single data-driven ecosystem, creating both efficiency and scale. UnitedHealth's financial performance is a testament to its strategic vision. In 2023, the company generated over $450 billion in revenue, with net income exceeding $20 billion. UnitedHealthcare, the insurance arm, contributes the majority of revenue, primarily through Medicare Advantage, employer-sponsored plans, and Medicaid. With more than 50 million members enrolled in UnitedHealthcare plans, the company wields unmatched scale and bargaining power. UnitedHealth does not operate in a vacuum. Its rise must be understood against the broader US healthcare landscape, where competitors like Anthem, Humana, and Cigna vie for market share. While each of these insurers has carved out a niche, none combine insurance coverage, healthcare services, and data analytics at the scale of UnitedHealth. Competitors often focus on either traditional insurance or specialized services, but UnitedHealth's integration through Optum gives it an unmatched competitive edge. Optum, meanwhile, has become a high-margin growth engine. It offers healthcare services to hospitals, clinics, and pharmacies, manages pharmacy benefits for millions of patients, and develops data-driven solutions for care management. This dual structure, insurance plus services, creates a self-reinforcing competitive advantage, allowing UnitedHealth to capture value across the healthcare spectrum. The company's dominance extends beyond revenue. UnitedHealth has significant influence over healthcare policy and provider networks in the US. Its size and reach allow it to negotiate favorable terms with hospitals, providers, and pharmaceutical companies, giving it leverage few competitors can match. Investors recognize this strength, and UnitedHealth consistently ranks as one of the most valuable healthcare companies in the world. UnitedHealth's rise has not been without controversy. Critics have raised concerns over claims denials, pricing transparency, and the company's market power. Allegations of anti-competitive practices have occasionally surfaced, particularly related to Medicare Advantage, plan offerings, and provider negotiations. Legal and regulatory scrutiny is a constant, as policymakers examine how the company's dominance impacts costs and access to care. UnitedHealth Group has faced many challenges over its history, but few were as shocking as the tragic death of CEO Brian Thompson in December 2024. Thompson, a respected executive known for his strategic vision in expanding UnitedHealth's Medicare Advantage and Optum divisions, was fatally shot outside the New York Hilton Midtown. The suspect, Luigi Mangione, was apprehended 5 days later in Altoona, Pennsylvania, and now faces multiple federal charges, including murder and stalking, with prosecutors seeking the death penalty. The motive, according to investigators, appears linked to personal grievances with the US healthcare system. Mangione reportedly harbored anger over insurance claim denials and broader systemic issues within healthcare policies. While Thompson himself was not directly responsible for these grievances, his role as the face of UnitedHealth made him a tragic target. The event sent shockwaves throughout the company and the industry. Employees were left grappling with grief, uncertainty, and heightened security concerns. For investors, it was a sobering reminder that leadership at a company of this size is not only about strategic decisions, but also about navigating unforeseen crises. Despite the tragedy, UnitedHealth's board and executive team quickly stabilized operations, reinforcing the company's resilience and commitment to its 100 million members. This incident also highlighted the growing scrutiny and emotional stakes in U.S. healthcare. As UnitedHealth continues to dominate the industry, it operates under constant public and regulatory attention, a reality made painfully clear by this unprecedented event. Despite these challenges, UnitedHealth has maintained its growth trajectory. Its investments in technology, preventive care, and integrated healthcare services are frequently cited as reasons the company remains resilient. While public perception varies, financial performance and market share continue to demonstrate that UnitedHealth's strategy of scale, integration, and data-driven management is highly effective. UnitedHealth went public in 1984, offering investors a chance to participate in its ambitious growth. Early shareholders who recognized the potential of a data-driven integrated healthcare model were rewarded handsomely. Over the decades, the stock has consistently outperformed the S&P 500, reflecting the company's strategic acquisitions, expansion into Medicare Advantage, and the creation of the high-margin Optum division. Investors who held UnitedHealth shares from the IPO through today have seen remarkable gains, turning modest initial investments into substantial wealth. The company has also maintained a track record for dividend growth, further cementing its appeal to long-term shareholders. Even amid controversies, regulatory scrutiny, and tragic events such as the 2024 death of CEO Brian Thompson, the stock has demonstrated resilience, illustrating how market confidence in UnitedHealth is tied not only to its financial results, but to the enduring strength of its integrated business model. Looking forward, UnitedHealth is well positioned to continue expanding its influence. The company is investing heavily in artificial intelligence, predictive analytics, telehealth, and personalized care programs. These initiatives aim to reduce costs, improve outcomes, and further integrate care delivery with insurance coverage. With U.S. healthcare spending projected to exceed $6 trillion within the next few years, UnitedHealth's scale and diversified operations make it a dominant beneficiary. Medicare Advantage growth is expected to continue, driven by the aging population, while Optum's expansion into international markets and healthcare technology services could open new revenue streams. Analysts forecast steady revenue growth and strong profitability for the foreseeable future, cementing UnitedHealth's position as a healthcare giant. From a small Minnesota insurer to a global healthcare powerhouse, UnitedHealth Group's story is one of vision, strategic execution, and relentless innovation. Richard Burke's early insights into data-driven care and preventive strategies set the foundation, while leaders like Stephen Hemsley and the expansion of Optum propelled the company into uncharted territory. Today, UnitedHealth touches millions of lives, shapes healthcare policy, and redefines how care is delivered in the United States. Thanks for watching. If you enjoyed this origin story, be sure to like, comment and subscribe to Stag Research, your go-to channel for business deep dives and founder legacies. Got a hot take on UnitedHealth Group's future? Drop it in the comments. Mr. Stag, logging off.